The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the January 12th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to just simply squeeze everything out of the day and have an extraordinary one. Of course, one of the easiest ways to do that is to always remember that what's talked about is a dream. What's envisioned, I think it's downright exciting. Of course, what's planned becomes possible, but what's scheduled becomes real. And I want to thank you for scheduling your time with me. I am grateful for your presence here today. I am here to serve you. So go ahead, pick up that phone, give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So don't do it for you. Don't do it for me. Do it for them. A random act of kindness. That's the way to start your magical Monday. Of course, this is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow trading down 122 points at 17,614. S&P off about 18 points, trading out at 2,026. Composites off 43 points at 4660. Russell 2000 down 11, trading at 1174. The DAX is up 26 points, but she's given back about 150 points or so of its gains, at least, I think. She's trading at 96.74. The FTSE's down 37 points. Gold is up about $9.50, trading at 1225.70. You've got silver up 13 pennies at 16.55. Light sweet crude back $2 now, trading at 46.35. The King dollar is basically flat out here. We'll take a look at the currency pairs. Moving to the upside, you've got a couple of buyouts. We've got Foundation Medicine, FMI. You've got MWI, Veterinary Supply. Of course, leading the charge, really the downside, the ETF, the SCO. I think that is a 200% or 300% leverage position inside of being short light sweet crude out there. Techmira Pharma up $5, Biogen up $4. To the downside here, we've got Priceline. Priceline's off $23 this morning, down 2%. Tiffany getting hammered out there. Tiffany is down $12. She's trading out at 91.33. That's down about nearly 12%. You've got SanDisk off 11%. Bit Auto down 12% out here. Now, from an intraday perspective, let's go take a look at what's going on inside the ES Mini. Let's put the 30-minute chart up on our screen. We've got the completion of an A to B equals CD to the downside. Let me go ahead and get the retracements here off of my screen, see if I can do that. There we go. Come on, do this. Delete it, would you? Come on, do it. Let me get it back here. There we go. Okay, so let's take a look at the A to B equals CD to the downside. The A point starting back up here. I won't go take a look at the time. There's our B. Here's our C point out here. No, we don't have an A to B equals CD on the, I guess I have it on the 10-minute chart, not on the 30-minute chart out here. So 30-minute chart says 2009 should be our target. You're about 2018. I thought I looked at it was a shorter term time frame. So it was the 10-minute chart out there that had completed an A to B equals CD to the downside. But it looks like about 2009 is going to become our first target. You're 2018. That is inside the ES Mini. Hey, let's go to Spokane, Washington, to James. James, thanks for calling. Thanks for holding. How you doing today?
I'm doing good. How about yourself?
I'm doing just great. How was your weekend?
Good.
So, are you going to be watching the game tonight? Are you a Ducks or a Bucks?
No, I'm not.
You're not.
Just a Seahawks fan. That's about all I am.
Ah, okay. Well, then, congratulations there.
All right, thanks.
Yeah. Now, you wanted to take a look at, looks like ticker symbols AGNC. That's American Capital Agency Corp. Tell me what you're doing, how I can best help you.
Well, I'm just kind of watching it. I'd like to, eventually go long in it, but it looks like I might still be pulling, back a little bit. I was just kind of wondering what you think about it.
And the time frame, you're looking at this because you want to have this as a longer term holding, or what's your tell me what you're also really trying to accomplish with this.
Yeah, probably just a position trade, more of a shorter
trade.
term, I guess.
Okay. Well, then what I would say from that standpoint, it would look to me like your best buy is going to be in this $21-ish area. And what I would say here, James, is that back on the trading session of March 27th, this got down to a low of 2104, and it did with 4.5 million shares. And then it gapped down on September 26th with 7 million shares as it came back to test that area. Now, it formed a nice little hammer candle on that trading session on September 26th. And so I would say at this stage, you're not trading into either of those swing points just yet. So it is right now dealing with the lows here from December 16th, much like the market is. So this is trading, in essence, kind of in conjunction with the market. So right now it's dealing with the December 16th area that has 3.9 million shares. And today you've done about 600,000 shares. So mathematically, this says that it's kind of coming into that area with light volume or similar type volume. And so if this breaks below 21.75, pretty good chance you're going to be able to pick this up in the $21 area. What I would also say is, let me see, this low down here was September 29th, so it wasn't the October 15th low. I would say, you also want to really try to time this with the direction of the market. And the market does want to make my read is that the market wants to make a significant bottom. Significant enough in the month of January that it likely is the low for the year. Once this bottom gets formed, we won't see these lows again. And so that being said, if you're looking to pick this up, ideally for you, you'd be able to pick it up into that 21-ish to maybe 21.55 type area, somewhere right around there. And you're 21.88 right now. Okay. That's what the daily chart looks like. Now, what this stock is going to do, let's say you do pick it up and things work according to plan out here, you're going to have to make some decisions in the $23 area. So you said you were looking at it more from just a position trade. I would say is that if it's coming into that $23 area with more than 7 million shares, you might be able to get even more out of it.
Okay.
But otherwise, if it's coming in with less than that, then it's time for you to take your profits if the trade works out that way. That's what the daily chart says. Real quickly, let me just switch this over to the weekly chart here for you. Again, folks, if you're following along with us at home, we're looking at ticker symbols AGNC out here, American Capital Agency. Yeah, I don't see anything special really on a longer term on a weekly chart other than, let's say, that 24-ish, 23-ish area is going to be a pretty strong level of resistance for you.
Okay.
All righty. You also want to take a look at Agnico Eagle, I believe, right? AEM, are you in that position, or tell me what you're doing?
No, I'm not in that. I think I kind of, I missed it off the bottom there, and so I'm kind of wondering what would be a good price to get into that for the first time.
Well, at this stage here, so let's we have to make a couple of assumptions. First is that Agnico Eagle is going to trade along with the direction of gold. So what we haven't yet, but I'll do this with you. What gold here has done is gold today, Friday, actually broke through a trend line out here, and that trend line takes us back into July 10th. So it broke through that trend line this morning here. It's come back. It's tested that level. If gold breaks above 1239, then this is a real breakout up here. It's possible that the 1239 level, that gold could find some resistance. But even if it finds resistance, until gold gets back inside that trend, what I would say, James, is that we have a real break in gold. So that bodes well for Agnico Eagle. So if we switch back here, that your best buy at this stage on Agnico Eagle is probably at about 28.98. Now I use 28.98. That's the weekly TAS market profile out here. That's what I've got up on my screen as we speak right now. And it's very possible that Agnico Eagle is going to run into some resistance at this October 13th. This is the week that began October 13th swing point. Now the high out there is 33.25. 32.14 happens to be the resistance area of its TAS market profile on a weekly basis. So I'd have to say it's trading at $30 right now. It's probably not worth the reward risk once I take a look at the weekly chart to jump in right now, but would be if it pulled back to 28.98 or 30.77. That's what the weekly chart shows me. The daily chart, on the other hand, let's go see what it says. The daily chart shows that the week of October 13th that I had mentioned, it's October 15th date, and that is really the swing point that it is tackling. Now, that swing right there, this little shooting star candle, that was from October 15th. The low there is 30.47. So it's already trading into that. And that had volume of 4 million shares, and today you've done 843. So 843, let's say 9 minutes. So it's moving into that level with volume. So anyone who's holding Agnico Eagle right now, I would say your odds favor that this is going to go test 33.25, and that is the high of that session out there.
Okay.
On the daily chart, a pullback into this says to me a pullback into probably 27.34 to 28.33 is likely where you would find support. Do you remember what I said on the weekly basis? What the number was?
Let's see. Yeah, it was 28.98.
Okay, so that 28.98, 28.33, 27.35 probably become your nice entry points into Agnico Eagle. That's what it shows me at this moment.
All righty.
Are you thinking of something else, or?
No, that'll do it, Steve. Thanks a lot.
Yeah. Hey, my pleasure, and thanks so much for listening to us.
You bet. You have a good day.
All righty, you too. That was James in Spokane, Washington. Back to the markets out here. We've got the Dow. Let's go see what it's doing. She is trading off 109 points. S&P is down 16. So where was it that I had that A to B equals CD? Oh, it was on this chart right here. It was on the 10-minute chart. So I want to switch back over here. So we did see the completion of an A to B equals CD to the downside out here on the 10-minute chart. That's what's on my screen right now. That was coming off of this, looks like this little swing point out there. That started at 8:30 on January the 9th out there. I think that was the Jobs Friday number, was it not? Yeah, that was the Jobs Friday number out there, and that was from the high of 2,062. That was your A point. Your B point was 2,031 and a quarter. Makes about a 55% retracement. That was into the high here this morning at 6:10 a.m. and then it has made the 1-to-1 A to B equals CD. Also on a 10-minute. Again, it's a 10-minute chart that we're looking at here. It went ahead and got into that little sold condition. So at this stage here, we did get a little bit of what looks like a hammer, smells like a hammer, but I think that wick is a bit too high. We're not going to call that a hammer candle. So right now, you've just got the market just working off a bit of an sold condition on a very short-term time frame. So we'll see how the market here responds that way. And we'll look more towards those 30-minute charts here as we continue to dissect the market. Let's go take a look at what's going on inside some of the ETFs. We'll have to do this when we get back from the break. But inside the diamonds right now, she's trading off $1.19, down with 1.4 million shares. And let's go see what the diamonds are doing. The diamonds here, have they hit the swing point yet from January 6th? The high there is 175.54, and you've gotten down to 170. No, you have not hit it. Oh, you have 175.46. So when we get back, let's go take a look at the volume inside of the DIA. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report.
Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 124. S&P is down 18 points, and some good football over the weekend, for sure. And setting up some great football this coming weekend. I mean, think of it. You got Seattle and New England. Now, I don't know who's got the home field advantage, if it's Seattle or New England out there. I should have asked James when he was on the air out there, but it doesn't really matter which field they're going to be playing on. That should be a great game to watch, and it should be a good game to be watching. Indy and Green Bay out there. I don't know who's got home field advantage on that game also. But that should be some Seahawks are at home. Okay, thanks, Jay. So that's in that case there, I'm going to give I've got conflicting information. I've got the Seahawks at home and I've got the New England at home. So in any event, maybe you meant the Packers. Cross-reference New England versus Indiana. And in any event out here, it's going to be some great football. And tonight, I'm hoping that tonight is going to be a great football game as well between the Oregon Ducks and the Ohio State Buckeyes out there. Now, the Ohio State Buckeyes, they've been a team out here that they've been resilient for sure. So it's all going to be about whether or not their defense can keep up with Mariota or not. In any event, let's go try to keep up with the markets. Go see what's going on inside of the ETF area. Let's go take a look at the Dow Diamonds. As I mentioned, the Dow Diamonds had hit the swing point here earlier this morning. The swing point from the trading session of January 6th. The top of that was 175.54. The low so far this morning has been 175.46. All right. That swing point has volume of 10 million shares. You've done 1.6 million shares so far today in the first hour of trading. Now, 1.6 times 6, that's going to give me about 9. We have another half an hour. Volume is about similar. As we speak right now. And if volume doesn't pick up, you typically get that volume, that first crushing volume in the first half hour of trading out there. So it's possible that volume is coming in light and the Dow Diamond's on that swing point. Won't really know till we get to that stage. If it is light, now they've got a test of a swing point with light volume. That says, okay, you can bounce up and go back and test the highs. These are a frustrating market, I think, for many out here. And if you take a look at where the Dow Diamonds were trading on December 31st, you're not that far away. Where's December 31st? The Dow Diamonds closed out at the price level of 177.88. You open, you close basically at about that level on Friday, or 176.26 out here. But right now, here's the deal, though. If the Diamonds do close inside 180, I'm sorry, I got to get back here. That wasn't right. 175.54, volume or not, it says it will likely go test the 172 mark. If it's coming into that swing point with volume, that says you're going to go test lows and maybe go ahead and bust that to set up that A to B equals CD to the downside. Inside of the Diamonds, if that is the pattern that is setting up, that's the pattern that Steve-O would prefer, but that doesn't mean that that's what's going to happen. It's just the pattern that I would like to see take place out here. That would say that you'd be looking for a move down to about the 170.67 to 168.38 level inside of the Dow Diamonds, DIA. Let's go take a look at what's going on inside of the SPY here this morning. She's had 37 million shares so far traded. This is trading inside of that swing point. That's the swing point again from January 6th. Let me do this out here. Let me get rid of that. Click, click, delete. Should delete it. There we go. Okay. Let me just do this. Makes it a little bit easier for you to actually visually see. It does for me as well. It gives me that price point. Okay, so it's the 202.72 mark inside of the SPY. Now the volume on September. Let me move this up here. The volume there on January 6th, 209 million shares. You've done 37 so far. So 37. You're coming in with more volume. So the SPYs are actually coming into that January 6th swing point with more volume. And he closed today below 202.72, says you're going to go test the low at least, and that low would take it down to 198.85. Now, the likelihood, if you're coming in with volume, and what Steve-O would be looking for, what my preference would be, is an A to B equals CD down across the board out here. That would become buying the D point. That's what we'd be looking for. Inside the SPYs, you're looking at 196.30, maybe 193.55, because what I'm expecting, and what you should be expecting, too, is you should be expecting a major bottom to form here in January. It's the bottom for the year out here. And inside the Qs, the QQQ ETF, as we take a look at it, we're going to really do the same thing. That way we can take apart these ETF structures out here. The Qs right now are trading inside that same January 6th swing point. The volume there inside the Qs on January 6th was 66 million. You're down so far with 12 million. 12. Yeah, that gets you. You're into that swing point with volume. Says at least the low will be tested. We get back from this break. We'll go take a look at that A to B potential. A to B equals CD to the downside. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Is down 8. I had the games reverse there, so it is it's New England is at home against the Colts. Thanks there, Dave, for passing that on to me. And Seattle's playing at home against the Green Bay Packers. So yeah, looks like Dave's thinking it could be New England and Seattle in Arizona. I'd have to agree with that. And then even looking forward to some good football out here. Back to this game though, and let's go take a look at natural gas for Dave out here. He's taking a look at. We'll take a look at the current contract, the March contract here for natural gas, down about 9 cents. And the question is this: any thoughts on natural gas? How low can it go? He is short natural gas out here. If we take a look at where this could head to, let me try to pull up this other chart out here too. Give me a moment. I'll kind of multitask. Right now, what we don't have inside natural gas is any kind of bullish reversal signal for you. So with regard to the question of where can it go next, the 1 to 1.272 A to B equals CD would take it down to $2.66 out here. But what I want to do is I want to file recent. Give me a moment here to see if I can find this, see if it's right here. Is it in these slides? It's not. File recent. Give me one more op radio slides right here. Okay, so natural gas, I think it's this chart right here. Okay, so if we take a look at natural gas, let me do this. Slideshow from current slide. Okay. Now this is Dave here. This is the This is the. I think this is about 11-year average, seasonal average for natural gas. Now, what the seasonal average for natural gas shows is right up here, right around December the 2nd, was on the average over the last 11 years where natural gas has formed a peak. It had nothing to do with regard to the mere fact that, because certainly winter's not over around then, but just in this case here, I think it peaked just a bit earlier than that and then sold off. Now, if we come back to the beginning of the year, it shows that nat gas does not typically bottom or form its first bottom until right around the early part of February. To give you an idea, let me see if I can do it on this chart here. It's right around February 14th, so right around Valentine's Day. That does not mean that there aren't some gyrations there. So I don't know how long you're planning on holding that trade. I can tell you that seasonally speaking, right around the end of January, the early part of February, February 14th, as I say, that is typically what natural gas has done over the course of the last 11 years out here. So hopefully that helps you from a trade perspective. If we take a look at nat gas on a continuous contract, just so I can have some more data to take a look at, let me put that up on our screen. Let's take a look at a longer term chart out here. So let me put the weekly chart for nat gas, see if there's anything else maybe that it's trading into. And that's really what we want to look at. Is this there, some other areas of support inside nat gas out here? And the reality is, let's look at the A to B equals CD down pattern. Let's get a price projection here. That's coming off this high back in the February of last year, February 24th out here, the high. The B point being March of 2014. Again, it's a weekly chart that we are looking at, and then a C point out here in June of 2014. So this gives you about 2.61. So you'd have to say right around that 2.61 level, that could also be a pretty decent area of support for you. So I hope that helps you out. And thanks for helping me out. Little hammer candle also back here in August of 2012, and that low is down at about 260. So that's where, now here's the deal with regard to any stock chart, any time frame that you trade. In the case of price moving lower, it'll always continue to move lower. Oh, don't tell me. It'll always continue to move lower until you see the first bullish signal arrive. So you can always continue to hold on to that trade until you actually see that. So that's inside the nat gas. Let's go back to the ETFs out here. Let's see, what were we looking at? We were looking at, we looked at the SPYs. Oh, Qs. We were looking at the QQQ ETF. Now, inside of the Qs, right now, so far this morning, what we know is they're trading inside that January 6th. The top of that swing point is 101.75. The volume there was 66 million. You've done 13 million so far in the first hour of trading. That sets up about, well, if the volume were to maintain this pace, that would set up a pretty good volume of about, 90 million. I don't think that is really what's going to take place. But nonetheless, and they close inside of 101.75. Your expectation should be that price would travel down to the lows. Now, the cool thing so far in taking a look at the markets here, you're going to get a lot of information today because we've seen the Qs, the diamonds, and the SPYs. Now, the diamonds so far have rejected that January 6th swing point. The SPYs are trading inside it. The Qs are trading inside it. If the SPYs, the diamonds, and the Qs trade and reject that swing point, trade above it, it says it says the choppy market that we're in continues, and that what you could perhaps expect is a move to go to at least bounce or maybe even go test the highs here from Friday out there. Now that's what its message would be. So if you write those numbers down on your pad of paper and you see how the markets close at the end of the day, that way ahead of schedule you'll know what to expect and you'll know what to anticipate is really is a better way to frame it. If we take a look at anticipating things, let's look at the IWM. Now, the IWM on Friday closed inside of that January 6th swing point. Now, that had 67 million shares. You closed into it with 26 million shares. So what's the message here of the IWM? It was like, hey, when you do close inside a swing point, you can go test the lows till you reject the high, in this case here with the market that's moving down. You're still trading inside it, the IWM. That says it could go test that low at 114.36. Today's volume is 9 million shares. Friday, again, was 26 million shares. So what we can say here at this stage is it does look like the IWM is picking up some steam on the way down. but still probably not enough steam here to say that it wants to bust out the January 6th level, and that's what's going on inside the IWM. Hey, if the IWM closes today above 117.77, what I can tell you is that the move down is over for the moment, and we ought to expect at least a test of the highs, if not the potential for an A to B equals CD to the upside in some cases out here. So that's really what's going on with the market. I say that this is going to be a little bit of a tough market here to navigate for both, because you're getting a combination of some bullish signals and some bearish signals out here, and that's just what the market's going to do until it decides to really put in that bottom here in January. And it's likely not going to be today. So that's what's going on inside those ETFs. If we take a look at, let's go take a look at what's going on inside some of the sectors inside of the S&P 500, see if we can get any gauges there as to what's going on. You've got the XLK, the technology sector. That is trading off 38 cents, 2 million shares so far today. That's also trading, or it is tested, I should say. It is tested here, the swing point from January 6th. Now, that swing point, 8.7 million shares. You're down with 2 million shares. So you're coming into that level with some volume out here. So far, though, you've rejected the high, that high being 40.76. Goes above 40.76 today. If you're punching down with more than 8.7 million shares, it'll go back and it'll test it. If it's less than 8.7 million shares, you're going to have a rejection of a swing point with volume. In fact, if you got to close today, because we're seeing a test of the December 16th swing point as well, and that's got 15 million shares. At this stage of the game, we don't see that kind of volume. So when it closes above 40.81, you could have a double rejection of a set of swing points out there. So that's how you'd be watching the S&P, or the SPY, I should say, to get a feel as to what's going on inside of the market. Let's take a look at the financial sector. Now, the financial sector on Friday looked pretty horrid out here. The financial sector moved and closed inside the January 6th swing point that had 46 million shares, but it did it with light volume, 29 million shares. Nonetheless, you close inside a swing point. You're still trading inside that swing point. Says you can go test the lows. That's both the low of December 16th that had 36 million shares, 46 million shares on January 6th. That's the one that I'd be looking at, and that low is at 23.73. So the second weighting structure inside the S&P 500, it's not saying a rejection of any kind of a swing point. It needs to get down and test that low at 23.73. Healthcare sector, the XLV out here, that's up 3 cents as we speak right now. The healthcare sector, she is strong like a bull out here. Did get a key outside session. We won't really call it a key reversal on Friday, but we did have the high and low from the prior session exceeded. Did have a bearish engulfing candle, the red body here wrapped around that green body. But nonetheless, you had a breakout with 22 million shares, and Friday pulled back with 9.7 million shares. The XLV, she is not ready to croak whatsoever out here. This is strong. So this is, I think, the third weighting inside of the S&P 500. Let's go take a look at that energy sector and see what we have going on out there. Inside of the energy sector, the XLE off a couple of bucks with 8.2 million shares. Now this thing here is trading into that swing point from December 16th that has 57 million shares out there. So forget about the January swing point. That has been taken out with light volume so far. That had 41 million shares. You've done 8 million shares. We're going to give it the benefit of the doubt and say it's got volume. So it looks like the energy sector getting ready to come back and test the 72.51 level. 72.51 is the low of December 16th out there. That's what's going on in 4 of the sectors inside of the S&P 500. Let's take a look at what have I not looked at for you guys out here? What have I not looked at for you? That's the real question. That would be, well, let's see, currency-wise. Let's go see what we've got going on currency-wise. Let's look at that euro. The reason we're looking at the euro, if you didn't catch the first hour, was because we've got A to B equals CD to the downside. We have a 1 to 1.618, A to B equals CD to the downside. That completed on Thursday and Friday of last week. Friday was the key session because it was a bullish engulfing candle out here. And any type of close today above 118.40. 118.40 is the number. You're 118.30 as we speak right now. That would say to me that you're about to see the euro at least bounce. That bounce, 120, maybe 1.206, maybe it's 1.225. That would be the message of the euro out there. If we see that, and we put that in conjunction with the with light sweet crude, what we're likely to see also is a bounce there. Now, the beauty here about light sweet crude, as I have it, from the high, I believe it was on June 23rd or somewhere right around there, we've got the third recycled count into a seventh wave to the downside inside of the Chapman wave. That began forming here this morning as light sweet crude made lower lows out there. It's doing it with less relative weakness, so you've got that type of pattern that could be in play out here. What you'd be looking for is some type of bullish reversal signal. You don't got that. You don't have that here as we speak today. But you could see that that would form tomorrow overnight or something if, in fact, we were to see the euro bounce. Why? Because that would go ahead and that would put some weakness inside of the euro. So we'll see how those two are really setting up to look like a potential trade out here, which would be going long the euro and long light sweet crude out there for those of you that have the stomach for that trade out there. Let's take a look at, let me see here. Let's go look at some of the mining equities. This is kind of an interesting one here. We've got Gold Corp. Now, the reason why I say that is because it's the number one weighting inside of the GDX. Now, Gold Corp, right now as we speak today, it's running right into resistance, pièce de resistance, and that was the downdraft that did form on October 30th. That had 21 million shares to the downside. Now, we are up, in the case of Gold Corp, you're up with light volume. You had 15 million shares on January 26th. 10 million after that, 12 million Friday, 9 million. So far today, 2.6 million shares. Nonetheless, if it can close above 21.42, that would be very bullish for the GDX. It would be very bullish for Gold Corp as well, because it would then have closed that window. It would close that level of resistance at 21.42, and you'd like to see that level hold. And with this being the number one weighting inside of the GDX, that would be bullish. Hey, it's more than what's going on inside of Gold Corp, but Gold Corp here could be giving you an important signal as we speak today. Barrick Gold, that's also inside of the top 5 holdings inside of the GDX. If we take a look at it, its message is one more of being tired than anything else. This also has a level of resistance that it needs to get above. That was from its downdraft from December 15th. Now, that only had 24 million shares on that downdraft. It was that window was tested on January 6th with 21 million shares and 14 million shares the following trading session. A little high wave-ish type candle yesterday. Today, not doing much, a little doji as we speak right now. But if you can see it close above 1142, that would bode well for this equity. You have a request to go take a look at from the Tiger's Den of DWTI. DWTI is the ticker symbol. That is the velocity shares 3 times inverse crude. So opinion on DWTI, will it hold? Well, I think that what you've got to do inside of this is the short position for crude oil, I would imagine, right? Yeah. And I think you just simply have to come back and pay attention to what's going on inside of the contract. So as we speak right now, yeah, it's going to hold. You don't see any kind of reversal. I really think that what we would do is, big, huge bounce inside the DAX. Z, thanks for pointing that out. Up 100 points right now. That was down almost to break even earlier. That's as it comes into its close. I think that's at 11:30. Come back. Let's go take a look at the DAX. But to answer your question with regard to that trade in light sweet crude out there, there's no reversal signals yet. But anticipate it, because there's some potential out there to see some type of reversal. Steve Rhodes, TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 80 points, 81 points. S&P is down 15. If we closed right here, if this was the closing bell right now, I would say that a pretty good chance you'd see a bounce tomorrow. We've got the VIX index is up $2 right now. That's up over 10%. One-day rate of change greater than 10%. You got an 80% chance that you'd see at least a intra-session bounce tomorrow. So, but I don't know that this is where things are going to close at. So that's what that is telling me. A little bit longer term, what what this says to me. If we take a look at, if we just simply take a look at the message of the markets and what they're really communicating to you and I as we speak right now. First, let me just go take a look at a 10-minute chart. I had mentioned the 10-minute chart earlier when we were looking at the ES Mini. What do we know here? Well, we know at about 6:10 this morning, 6:20 this morning, we got a nice little price relative strength divergent pattern out here. At the same time, it was coinciding with a 7th wave count to the upside. Inside the Chapman wave, it was also running into resistance of this TAS market profile out here that turned to be a pretty significant resistance level. Got below this blue line. That is also says do not be long out there. Now what we've seen here is 4 waves to the downside. We're seeing a little bit of a bounce. There's not a lot of energy inside this bounce on this 10-minute chart. You got the little hammer candle out here for sure. We're giving it the benefit of the doubt. That was at 10:10 this morning. That says inside the ES Mini, the key level to be watching is at 2015.25. You close below 2015.25. If you're long, you're wrong. Is really the message. You shouldn't necessarily be long here, but I don't know what time frames it is you're trading things on. At this stage here, daily chart, there's no message here to be long. That's for sure. At least not anything that I see. Unless you're trying to buy some type of bottom tick out there, that would be a different story. But I don't think that's the case. At least that's not the message here just yet. That's on the 10-minute chart. Anything can happen. It's 10:56, 10:57. Could be a whole new thing out there. But at 10:56, what do we know? Well, we know summation index for all 3. Well, not all 3, but the 3 that I'm able to track for you easily. The New York Stock Exchange, the composite in the center, the Dow on the very right. All price oscillators below 0. That means the summation index has turned down. That says that the sellers have control of the market. Oh, big deal there. Anybody could have figured that out, right? Wrong. Not necessarily. What you want to know is you want to understand where that summation index is and what's going on inside the price oscillators out there. So those are all pointing in the southerly direction out here. If we take a look at the VIX index, I mentioned that earlier. We can see that's above the 50-day exponential moving average, 1646. We do have about an 11% jump here today. That says if you end, as I say today, it says you're going to see a bounce within the next 48 hours, likely the following day, at least intra-session. But nonetheless, right now this says liquidity is a bit low out here inside of the VIX. So this says good news for the bears, bad news for the bulls out there. If we take a look at the other liquidity gauge, that's pretty simple. That's the euro Japanese yen. She is showing nothing more than it wants to move lower out here. If it wants to move lower, there's no way the markets move higher and try to buck the currency pair. Forget it. It's just it won't win in the end. It'll put up a good fight, but it won't win in the end. And at this stage, this currency pair says it wants to get down to 139.42. So that in summary, I think should be a decent summary as to where we're at. And I know we'll pick things back up tomorrow, but you get to pick things up in about, I don't know, about 9 minutes or so with Basil Chapman. It is a magical Monday. And on magical Mondays, that means after Basil's show, we've got Larry Pesavento. After Larry, we've got Daryl Martin. After Daryl, we've got David White, and then Tom O'Brien from 3 to 5. So thanks again so much for joining us, folks. If you're off to start your Monday, have a great day. If you are a Ohio State Buckeye fan, then go Bucks. And if you're an Oregon Ducks fan, then go Ducks out there. I'm just looking forward to a good game. Take care, folks. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.